welcome to another episode of the Crypto Hour. Today, Friday the 23rd of January, and a week that has been dominated by geopolitical events, both in the traditional markets, and obviously crypto is also not an island that has reacted as well to it. And we'll see what news have kind of like moved the market, and what else is shaping perception. And also we have a look at today we'll have a look at the ARK Invest big idea report for 2026, especially in the areas they affect cryptocurrency. So let's dive straight into it. Eric, if you don't mind, I'll make you co-host, so if you can let people in as they turn up. Thank you. Okay, so let's share the screen straight away. Okay, you don't want to look at that. Sorry, let's first of all go and have a look at the economic calendar. Okay, so as you can see, this week there wasn't, in terms of announcement, there wasn't too much on the cards. We had some inflation announcements, like CPI in Canada. In Canada is now at the moment you're in a period of deflation, so the CPI is actually negative, although not as much as expected. So consumer prices going down rather than up. In the UK, instead they're going up instead of going down. So it's now 3.4%, putting pressure. As we know, the UK is one of the economies that is struggling more with the kind of like overall pressure, both for the monetary policy, kind of pressure on the bond prices, but also in consumer price inflation, which is still quite elevated at 3.4%. And the one that were more noticeable for the markets were yesterday in the US. So we had the GDP quarter-on-quarter numbers, we have unemployment claims, and also we had the PCE price index, which is the favorite measure of the Fed to then tackle their monetary policy. Okay, so that came, and we'll look at different indicators in a moment as well on somewhere else, but came pretty much on expectation. So although we go here the price month on month, but the yearly level of PC price inflation in the US is now 2.7%, so it's been steadily trending down towards the target. And the other important announcement we had today was the yen, the Bank of Japan policy rate, which was kept at 0.75%. But there's a couple more news coming, manufacturing figures later on in the day. But the main thing, what actually moved the market, was the Davos speeches. In particular, President Trump speech, not just on Wednesday, but what happened even before the market opened at the weekend, as he likes communicating by Twitter rather than anything else. And if you have noticed what he was saying, basically before the weekend he kept going on about Greenland and wanting to take over Greenland and threatening military action to take over Greenland. And then not just military action, but economically speaking, what worried also trade in between the US and other countries. He said that they would put tariffs on all the countries that didn't support the notion of the US acquiring Greenland in one way or another. Okay, then what happened on Wednesday is basically just backtracked, and he had a speech that was truly embarrassing, where he he exchanged Greenland for Iceland, and it looked like he's in advanced stage of dementia. But apart from that, and whatever you might think about President Trump, the US is still the big boy of the investing world, and so whatever happens in the US does tend to move markets. So I just show you very quickly on kind of like the Bitcoin chart. So this area here was the weekend. So you can see not much happening. Okay, from Thursday night really until Sunday night, and then following the announcement, as you can see, the immediate effect, because cryptocurrency is particularly considered like a risk-on investment. So you can see immediately kind of like it's pushed the price down of Bitcoin from where we were last week at 95 all the way down to 87. And then yesterday, so these are the big move here, was the announcement of the opening of the market yesterday and the announcement of the inflation. So as you can see, so this is where pretty much this is like a 2 o'clock, at 2:30 is the opening of the market, so is in between those times. If we go to a 30 minutes, you can see even better. Okay, so this is when the markets open yesterday, and then at 3 p.m. is the kind of the announcement. Okay, so the announcement price went up very for a little while, and then came crashing down and came back up. So pretty much we are back at where we were at the time of the announcement. So it hasn't had a kind of like any long-term effects. But from the point of view of expectations or the general economy, as the fact that the President Trump has backtracked and now is not going to impose any tariffs, which would hurt primarily the US consumers, has calmed the markets down somewhat, and although kind of Bitcoin hasn't really moved that much, but there's been positive reaction in the stock markets. So you can see the move in the in the S&P 500 and everything, which are still throughout the week are still. So you can see the drop here Sunday night as soon as the market opened, big drop in the S&P 500, from around 7,000 to 6,800, so 200 points, which is fairly sizable move for the S&P 500. Okay, so 7,000, so 700 would be 10%. 200 is 200 is around 3% move. Let's measure it from Friday night. 2.5, 2.3% move, which is fairly sizable in kind of a Monday and Tuesday, and then on Wednesday, so following the announcement again, the inflation, as you can see, the market have taken that positively. So this is where the market was at the at market open on Wednesday, and so inflation announcement at 3 o'clock, and it's been grossly positive since then. So from when we were on Tuesday night on here, then we have regained pretty much almost the whole big part of the drop that we had on Sunday. So we are almost now back at the starting point, pretty much. So all these panic and excitement has just simply taken it back to where we were at the end of the week, and a lot of what I found is that a lot of the injections of wisdom from President Trump has had the result of really confusing the markets for a period until they calm down and they start doing their thing again. So pretty much things are recovered. Moves in gold and silver have carried on almost like relentless gold is close to the $5,000 mark, something that was like unthinkable less than a year ago. Silver is now close to the $100 mark. Again, it was like $70 at the beginning of the year. So huge moves that are talking about, probably apart from silver is a specific case down to also supply of silver, and we can see that as well when we look at the gold silver ratio. As you can see, that silver has appreciated massively even against gold. So it's doubled in value compared to gold, not compared to the US dollar or compared to fiat currency. So this is the price of gold in silver. So it's gone from last April, where it was like 107, to now where it's just about 50. Okay, so takes silver with a pinch of salt, because it's kind of like a different scenario. But when we look at gold, this is the long-term chart, guys. This is not normal. Going in less than 2 years from $2,000 to $5,000 is not a normal market movement. So what this is telling me, there is a repositioning of central banks, which are slowly moving away. Just are not selling off the US dollar completely, but they wanting to acquire certain amount of gold as their reserve. So they're going to go back where before maybe they were overweight dollars, so they had mostly dollars, dollar bonds, etc., in their coffers. Now they have made some political decisions at central bank level to sell dollars and buy gold. And when you make political decisions, so if a central bank decides that they have to acquire, 20 tons of gold or whatever it is, they buy at whatever the price, because it's a political decision, it's not an economic decision based on price. So if they have to buy gold because it's been decided that they have to buy a certain quantity of gold, they carry on buying whatever the price. And as a result, this is what you see in the price move or something. Therefore, when we go down, maybe if we look at another, just let me look at another, maybe from forex.com. So if you look at a long-term chart, you can see that this is not normal. Gold from 2011 to 2020 did absolutely nothing. So 10 years of not only not growing like the stock market, but not growing at all. So if you bought gold in 2011, it would have taken you, here 13 years to simply be a break even again. So as you can see, gold is not so much an investment asset. Okay, it's a safety asset. It's a hedge. It's a hedge against political risk. It's a hedge against inflation. But something like this is something different that we've never seen before. So even during this time, when after 2000, when gold actually still grew a lot, by the time it was a much more gradual growth than what we're seeing right now. You can see just the angle of growth here. There is it's you sometimes you see these things in like meme coins or like a new crypto coins. They grow in that kind of rate, not gold. So that's to keep in mind. And the reaction to, as you can say, to the political announcements have been. Sorry, where was I? The reactions to the political announcement have been fairly clearly visible, on the price action of everything, and crypto in particular, because it's seen as the riskier of the institutional grade assets, Bitcoin at least. So let's now step back and look at something else. So looking at the long-term view towards crypto, because it's easy to get caught into the price. Oh God, it's going up, it's going down, it's going up, it's going down. But you know, if we stop thinking about price and thinking about, you know, what is crypto going to do for us, why it's important to have Bitcoin in our life, etc. As a global community, what does crypto do for us? And this is where it's important to look at where is my okay. So if we look here, this is the ARK Invest. You probably have heard about Katie Wood and ARK Investment, which is a company that does ETFs in particular in technology and technologically advanced areas. Okay, so each year they publish this report, which is free to download. If you go to to ARK Invest, to the ARK Invest website, you just have to type in your email address and you can download this report, which is, as you can see, 111 pages, so quite detailed. Okay, but we're going to look at some of the things in there. So you see the kind of things that they look at when they look at disruptive innovation. Really, that's their main focus. They look at the areas they are reshaping our life, and so they're looking at the pace of change, the exposure across different sectors, and the growth of the market cap, the uncertainties and unknowns, the problems with the regulation, the political legal pressure, and then the competitive landscape. So here they want to understand a cross-sector understanding of technology and combine top-down and bottom-up research, and also aim to understand the regulatory, the market, the sector, and the company risks. Okay, so these are the areas that they cover in this report, which I would encourage every single one of you to download and at least scan through it. I will not expect you to read through 111 pages in detail, but at least have a quick look, understand what the different areas are, and then maybe focus on a few areas that take your interest, and try to understand why this may be interesting in the future. So if we look at these areas here, for example, obviously this is a crypto hour, so we concentrate on the things that affect crypto. Right? So we'll look at Bitcoin, tokenized assets, and the decentralized finance. But it's important also to look at this and see how all these technologies are actually interacting with each other. So this kind of chart looks at how the different connections that these different technologies have with each other, because some of these innovations of the future will not be used by us, but will be used also by AI agents, by humanoid robots, and stuff like that. So the effect of a lot of this technology has also has a profound change in the way that we live our life, and this is why it's becoming valuable. So would you have thought 20 years ago that one of the most valuable companies on earth would be a company that produces reusable rockets, for example? But this is where getting in early in some of these possible investments could be potentially life-changing. Okay, so if we stop looking at what's going to happen in 3 months' time, is this stock that I'm buying going to go up 10% or down 10%, and think about is some of the technology that I am accessing through this, is it going to be relevant in 3, 4, 5 years' time? And is maybe the company that I'm looking at, or the kind of token that I'm looking at, or anything, has it got an advantage towards competitors? So a reason that it's going to stay relevant in 2, 3, 4 years' time. So if we go and have a look at, so we start from Bitcoin here. This is interesting because it's looking at how the Bitcoin price has moved last year in 2025, and the different events So, so apart from the kind of President Trump inauguration and the talking about strategic Bitcoin reserve, as you can see, even talking about strategic Bitcoin reserve didn't have a big influence on price. But this is the launch, so the things that are relevant that I want to concentrate on. Fidelity here launches the crypto IRA. Okay, so the first pension account where you can have crypto, where you can use your cryptos in. Wisconsin's pension fund adds Bitcoin to its portfolio. So these are not small decisions. Metaplanet launches a 5.4 billion Bitcoin treasury. And this is then towards the end of the year. So this is like, you see, all these things have happened in the last quarter. Okay, so this shows you how although is not reflected in the price, these are all things that, you know, when you're talking about institutional access, institutional investing, it takes time. There are things that need to go in place before that can happen. And see here how things have moved now. Now, after we had the Bitcoin and the Ethereum ETF, okay, now at the end of last year, the US, this SEC approved generic listing of standards for crypto ETFs. So that means that then it became a lot easier to have a crypto ETF traded in the market than you know, than it was previously possible. It took a long process of the SEC approving these funds. We had then kind of events. There was a liquidation event on October the 10th, okay, but then the US confiscated 15 billion in bitcoins that at least they said that they're never going to sell, which is, again, it's another sign of bullishness. Now, Morgan Stanley expanded access to Bitcoin fund investments. Morgan Stanley, one of the largest, you know, managers of fund and one of the most successful banks in the US. Absolutely brutal in the way they do things, but still, you know, the fact that they're moving into crypto again. These are people that 3 years ago said that crypto is a scam and it shouldn't be anywhere near it. And now they are not just changed their mind, but they're actively promoting because they understood how they can make money on it. Texas launched a Bitcoin strategic reserve. Okay, and Vanguard as well, which always has stayed outside of crypto. Vanguard, the biggest fund manager in the world, granting access to Bitcoin ETFs. Okay, so finally they said, yes, we're going to do them as well because everybody wants them, and if we don't do them, we're going to lose out. Okay, so now we got to the point that the ETFs and public companies, they are quoted into the stock exchange, like MicroStrategy, for example, and like we were saying before, like Metaplanet, they hold 12% of the total Bitcoin supply. Okay, so we now gone to 1.29 million from the Bitcoin ETFs, while public companies grew from 598,000 to 1.09 million. Okay, so the total percentage of Bitcoin held by ETFs and public quoted companies increased at 8.7% to 12%. Okay, so 12% of Bitcoin now is in the hands of, you know, public entities. Okay, so that's the number of Bitcoins, the number of Bitcoin in totally in circulation, and this is the percentage of total Bitcoin outstanding. So we're still waiting for about, you know, 12% of Bitcoin is still outstanding. Okay, now this also shows you the risk-adjusted return. So Bitcoin year on year risk-adjusted return has basically surpassed that of the broader crypto market. So Bitcoin has taken over in 2025, and we can see as well that the Sharpe ratio, which is the risk-adjusted return of Bitcoin, of Ethereum, of Solana, and the average of 10 coins chosen by CoinDesk, excluding Bitcoin. Okay, so so you can see here the different scenario, but in all scenarios, Bitcoin has been outperforming the rest of the crypto market. So you can see we're not going to spend a lot of time looking at every single chart, but generally speaking, the drawdown compared to the relative all-time high was a lot lower than it has been in the past. So we can see here this. So this is the drawdown. Like in 2012 was like 90%, 2015 80%, 2019 again 75% in 2022, and now we have, we've only had pretty much like 20% drop so far. So there is, nothing to say that it could go below, but if you can see the average, you can see the averages, the 5-year and 3-year average, which are the long-term averages for the kind of the yellow and the red line. You can see that they're steadily climbing up. So basically, we haven't had really the maximum drawdown that we've had in the past 5 years has been with the average has been less than 35%, and over the more recent, like the yearly and the 3-monthly drawdown, they are within the 20% range. So it's kind of like that is telling you that kind of it's maturing as an asset, and kind of probably not going to expect so the sort of drawdowns that we saw in the that we saw in the past, these big 85-90% drawdowns. So this is their forecast, and how they come to the kind of the forecast that they do. Okay, so their forecast was the Bitcoin would reach like $1 million by 2030. Okay, that was the main case. Okay, and these are the way that they come to those investments, and how that has changed from last year to this year. So this was the analysis at the December 2024, and this is the analysis to December 2025. Okay, so institutional investment asset is still, the assumptions are still the same, they haven't really changed. Okay, so it's considered as a percentage of a 200 trillion institutional global market portfolio. And you can see here they got like 3 cases. They got bear case, base case, and bull case. So 1% like a low case scenario, 2.5% middle of the way, and 6.5% in best case scenario. That stayed the same in 2025, with the kind of like impact in kind of like worst case scenario, the impact will be about 2 trillion. Best case scenario about 13 trillion. Okay, it's exactly the same. Digital gold, so how much like a Bitcoin would take over as a percentage of the gold market cap. And although the percentages have stayed the same, because gold has gone up quite a lot, then the impact also is now increased, because the 20% of the gold market in 2024 was 3.5 trillion, is now 4.9. 7 to almost 10, and 10.7 to almost 15. Okay. Here is talking about emerging markets safe haven, and the assumptions have actually gone down in this case, because they say the penetration decreased 80%, especially with a lot of pressure from the International Monetary Fund as well, against with countries like El Salvador and other countries. They are trying to go the digital route. They are putting like big obstacles in front of them. So as a result, the percentage of this 68 trillion market, the assumption have been revised down. So depending, we're having an effect from 68 billion in the worst case scenario to an impact of about 800 billion in the best case scenario. Then in case of nation state treasury, assumption has stayed the same. Corporate treasury, same assumptions. Bitcoin on-chain, financial services, same assumptions. Okay, so so this basically, the picture hasn't really, the outlook hasn't really changed much. It's actually the case is a little bit better than it was last year, because the case for digital gold has slightly increased, the penetration in emerging market has slightly decreased, but the overall, if you see the combination of these two numbers, it's largely positive. So the the assumptions of kind of the 1 million Bitcoin by 2030 have actually been revised slightly up, if anything. Here, now digital assets. At the moment, we are standing about like between 3 and 4 trillion in 2025. This is the number that I would like you to look at. The expectations are over 61% compounded annual growth rate. This is what CAGR stands for. So, so we're talking about both small contracts and digital currencies, so it can be used as both for everyday use, but also for stores of value, medium of exchange, and units of accounts. Okay, so we could expect a growth rate of about 61% from the current 4%. Sorry, for about roughly between 3 and 4 trillion to about 28 trillion in 2030. And the expectation again is that Bitcoin could account for about 70% of that market. Okay, and they expect that the balance dominated by smart contract networks. So they mention in Ethereum and Solana, but obviously there are more than that, and then will be seen which ones will succeed. But basically, they're making the assumption Bitcoin will still hold about 70% of the market value. So again, the expectation is that the market cap of Bitcoin will go from roughly about 2 trillion to about 16 trillion by 2030. So you can see how, going multiplied by 8, if we go to 125,000 in 2025, multiply that by 8, it makes about 1 million by 2030. The market cap of smart contracts is expected to grow again at 55% annual growth. Okay, reaching about 6 trillion by 2030. Okay, and this is just with an average take rate of 0.75%. So they're not assuming that everybody will be using them, but even with that small percentage, is still a very healthy growth. And here it's kind of the assumption is that 2 to 3 layer 1 smart contract platforms, so that it's like Ethereum, Solana, Cardano, should take the lion's share of the market, but garner more market cap from the monetary premium, like store of value and reserve assets, than discounted cash flow. Okay, so this is the expectation for Bitcoin. For other thing now, let's have a look at the other big elephant in the room, which is like tokenized assets. Can we move property on the blockchain? Can we move the stock market in the blockchain? There have been talks about moving the stock market on the blockchain, and then to allow for 24-hour tradability of stocks and shares, for example. So that is already on the cards. It's already being talked about, and decisions are being made, and things are being worked on to make it happen. So already, the Genius Act that was passed last year, financial institutions are reassessing the stablecoin and tokenization strategies. So we can see what happened. These are all announcements in the last 6 months, from June to December. Things like the Genius Act was signed into law in July. So Circle announced a layer 1 network. Wyoming launched their own stablecoin. Stripe has launched its own layer 1 network called Tempo, focused on stablecoins. Tether launched the mainnet for Plasma. So again they launched their own layer 1 network. Now here, Swift and Consensus is the company behind MetaMask, partner to add blockchain-based ledger to Swift, to the technology behind Swift. So kind of modernizing the technology hasn't really been touched for the past 50, 60 years to move money across borders. So then USDT appears on Solana. Stripe's stablecoin layer applies for National Bank Trust Charter. So this is where we're starting now to see the first examples of crossover between crypto and traditional financial system. You see, BlackRock is developing its own tokenization technology. Now, all these things, guys, take time. Okay, don't happen overnight. But see, even just look at the number of news, how this is accelerating. As we're going towards the end of 2025, more and more announcements. Here, Japan's mega banks launch a yen-backed stablecoin initiative. JP Morgan launches JPM coin. Yeah. So all these things. Western Union launches its own coin on Solana. YouTube enables creator payouts in stablecoins. Okay, so Visa launches native stablecoin settlement via USDC on Solana. So there are all these things that are happening. JP Morgan launches tokenized money market fund on Ethereum. Okay, so all these things, and here other approval for banking charters for, apart from Circle, Circle, BitGo, Paxos, and Ripple, receive conditional approval. Okay, so we can see what we got to look forward to in the near future is that this mix of banking and crypto services that would work to improve everybody's experience of moving funds across borders. So a flow of 3.5 trillion in December. Stablecoin volumes are going, not only growing, but are dwarfing other types of payment. So we can see now stablecoins payments now have moved over Visa, way over PayPal and remittances, and way over basically the banking system, which have been they've been basically steady. Here, the market for tokenized assets tripled to, 19 billion is still a small fries. Okay, so peanuts. But the fact is, what you got to look at is growth rate more than overall amounts. At the moment, it's still fairly insignificant on the overall market. But look at, now what is possible, what is the real world assets now that you find on chains. Okay, US Treasury debt, commodities, institutional alternative funds, corporate bonds, non-US government debt, here, stocks, private equity, private credit. So all these things now are starting to, so at the moment it's for a lot of things it's testing the case, seeing if it works. And once you can see if it works and the mechanism it's safe and sound, then they can scale it up. Because then obviously with a lot of crypto protocols improving their service, going from hundreds of transactions per second to thousands of transactions per second to potentially very, very, very soon we get to the hundreds of thousands to the millions of transactions seconds. That works pretty favorably even compared to Visa and MasterCard. At the moment, the preferred blockchain for on-chain assets is still Ethereum. Tron has made quite a big inroad as well, followed by BNB and Solana. Okay, and these are the, again, obviously Ethereum has got like first mover advantage because it's the first smart contract, platform, but this is what the situation is. In the different chains. Now, the thing that can be a little bit, I would say, difficult to calculate in all this is that a lot of overall market cap in certain blockchains is actually stable coins. As you can see here, for example, on Ethereum, like half of its overall market cap is stable coins. Like all this the blue area. Can you see this? Tron as well. Most of the market cap of Tron is stable coins. So if we were to, you can see the effect, the availability of the main stable coins like USDT, USDC, etc., what it has for the growth of a blockchain. So, you know, if we were to strip these out, then the picture will be considerably different from the one that we see here. But again, how can this develop, the tokenized assets? How can they grow, you know, in the way to 2030? You know, we can see the kind of growth that is expected by analysis. So tokenized stocks, they expect it to grow to around 4 trillion by 2030. All this sovereign debt, so bonds, and that again expected to be tokenized and available on the blockchain. Bank deposits as well, private credit, you know, corporate debt, etc., commodities like tokenized gold, etc., etc. So you can see the change at the moment. This is going to dwarf even the, if you think at the maximum level that the crypto has reached up to now was about 4 trillion overall. You know, as you can see, the market for tokenized assets at the moment is tiny, so is in the billions rather than trillions. You see, this was like 19 billions in 2025. So this chart is in trillions. Okay, so we haven't really even pretty much moved out of the bottom according to the scale of this chart. But this is the important thing, that traditional companies are now launching their own infrastructure, like Circle that launched the ARC blockchain, Coinbase, they launched Base, Kraken, OKX, you know, Robinhood, Stripe. They're all like rolling out their own versions of layer 1, layer 2 networks to support their own products, such as, for example, BTC, Bitcoin-backed loans, tokenized stocks, ETFs, stablecoins, base payments systems. Okay, so I think we'll stop here because then we'll go, there's only about 10 minutes left, but maybe we can have a look at the DeFi sector next week as well. But it's interesting as well, what's so much, you can see how the potential for growth, how assets are being moved on chain, and once they moved on chain, there are different players as well, because now we can do things for ourselves. We don't need the bank to do things for us. We can go directly. Once we're familiar with on-chain, we can go to DeFi and look at that for potential applications. So I think we'll stop sharing now, and maybe let's talk about some reflection or any questions, you know, topical questions or of anything. Anybody would like to start? And guys, if you could show your face as well, if you're presentable, at least that would be good. Otherwise, I keep talking to Eric. Hey, I could say Jonathan is in his red version today. Very fiery. Just
my bright orange hoodie. It's very Christmassy.
yeah, excellent. Okay, guys, who wants to contribute or ask questions or just anything at all? No, anything that you've seen is so much of it. By the way, has anybody looked at that ARK Invest report, just for, you know, to pass a few hours? Yeah, I know you don't. As I said, today we've gone through it kind of this quite in detail for those things, but it's even sometimes I find it interesting just simply flicking through. So you can flick through in about half an hour, and just stop and read a few bits that catch your eye. But yeah, understanding the kind of technology that so these are professional investors that are looking at all these different niches, and then they go and create ETFs to make to give people like us individual investors access to a particular niche sector without having to go and fish all the individual shares that may be traded in obscured stock exchanges in Israel or somewhere else, so they do all that research. And in the past there have been examples where they have been wildly successful. There have been examples where they picks haven't really done very well. So always do your own due diligence before you invest in anything, because even somebody that has brilliant results doesn't mean that they're going to repeat those results year after year. But definitely, I would use it as a point of, are there things that I want to keep on my radar? And you can you can look at the ETFs they offer and keep those under your radar, or you can dig a little bit deeper. And so you look, okay, if you're interested in, for example, I don't know, automotive transportation, for example, you think that is interesting. Okay, and then what are the companies that are included in their ETF? What do they invest in? So is it worth investing individually in any of those companies, even if you don't want to hold the ETF for diversification? We want to try to maximize getting the highest possible growth. So it's always good with the ETFs, because they're public documents. You can always go and have a look at the composition of the investment structure that they have selected, so you can look exactly at what they have bought, in what percentage they bought it, etc., etc. So if you're interested in a niche, let's say maybe, I don't know, the AI that is very popular today, there might be 15-20 different ETFs in the AI sphere, and if you go and look at them and look at what companies they invest in, you'll find that the same names keep appearing again and again and again. So obviously, you can buy the ETF, or you can always say, look, I think these are the market leaders in this sector. I'll just buy the market leaders shares, and you can repeat that for any sector or niche that you want to know a little bit more of. Okay, without having to become an expert in reading financial documents, and look at balance sheet and profit and loss accounts. So this is kind of like a nice trick to get the most out of what's out there without spending days and days doing research on corporate results. Eric, go ahead.
I learned something very fascinating about Elon Musk and Starlink. He wants to put his data centers up on Starlink on each satellite, and he will enlarge the solar panels, so he's got free energy. Put the data center on each one of the thousands of satellites, and there he doesn't have the cooling problems, and he doesn't have so he has enough solar power, and he doesn't have any of the problems which he would have down here. Fascinating.
Oh, that's fascinating to see. Kind of like obviously with the technology moving on, it becomes more and more powerful and smaller as well. So then it becomes, because obviously in space weight is a big issue. But as you can get the same storage with less space, I think that becomes like a viable option probably. Got no idea, but it's interesting. Where did you hear about that?
There was on Insta on there was a story about it. I try and look for it.
Hmm. Well, I'm saying that kind of Elon Musk has got so far a pretty good track record of coming up with innovative technologies that people think are completely bonkers, when he mentions it first, but then it managed to make it a reality, both with both with Tesla, Starlink, with the rockets, and even with the Earth Muncher, kind of like the technology to build tunnels. It's amazing what's been able to. So it almost like makes you think about the science fiction books in the 50s and 60s. Kind of all those ideas that were first thought of in science fiction literature, they are now becoming reality. So we look back at, I was a big fan of Isaac Asimov books, the Chronicles of the Galaxy, and I still remember kind of the way that these towns were planned, and I think actually we're not very far from having it today. So eventually, to make something become reality, somebody's got to think about it first. So it's good to have dreamers, thinkers. Some people are like Elon Musk. They are kind of innovators. They go completely out of the box, and others are incremental innovators. They take a company and just improve it by 1% every year or something like this. He is only disruptive. So this is the example we were talking about before, like looking at the ARK Invest report. Somebody like Elon Musk is a good description of a disruptive innovator. He's not an incremental innovator, like for example, an engineering company might be trying to improve process, making things cheaper, using better material, etc. He's like completely, not just forget about it, let's do something completely new that's never been done before. So yeah, very interesting. Thank you, Eric. I hadn't heard of that yet. And funny, like it's interesting because one of the big areas of growth of investment is data centers so far, and so it could also take the market away from people that already invested billions in Earth-based data centers. Sorry,
there is not enough energy for all the data centers they want to build. There isn't.
Well, I'm saying there is not enough energy at the moment, so you just have to plan their energy, and so use different sources of energy. And this is how you see, one of the areas of growth for investment, for example, is things that kind of effective in terms of the amount of energy they're producing. So nuclear energy has quite a comeback of late, and it's one of the things that you could look at. There are ETFs for investing in nuclear energy as well, in uranium and other stuff.
At the university in Switzerland, you don't teach anymore. So there is no, those engineers are dying. There was nuclear energy on every university, but one has, and it takes years until you have.
Sorry, Eric, could you come a little bit closer to the screen because I can't hear you that well?
Okay.
Sorry.
Nuclear energy is not being taught anymore at the universities. So the knowledge has gone down. And it takes years to build a nuclear power station to produce enough energy for the data centers they are planning.
Well, kind of surprised about that, because funny enough, our son had just been employed by a Canadian company that does nuclear power consultancy, and he's a mechanical engineer and just started his first job since graduation. But it's they're employing a lot of people because it's an area with fairly rapid growth at the moment. But yeah, it's sometimes you can see USA. We can see this is a classic example where political decisions have an effect on long-term outlook for certain countries. Like certain countries have decided that they don't want to have anything to do with nuclear energy, but probably they're still buying nuclear energy for neighboring countries like France, I imagine. So they got plenty of nuclear energy. So it's a funny game sometimes. It's a funny game. It's because if there was like a nuclear disaster in France, it would affect Switzerland too. so there's not much point. I think like let's avoid nuclear power station in Switzerland, but I don't know. Different subject. Okay, guys. So I think we've come to the end of the session. So we'll carry on next week. But just you know what? Just pay attention. I was thinking kind of like an exercise. Have a look at how if you got access to TradingView and you use it. So start seeing whenever there is like one of these major events or major announcements, have a look at the prices of different assets react to that thing. Not just of maybe crypto because we're talking about crypto, but look at the indices, stock indices, look at the gold and silver, look at different, different sectors. Like you can have a look, for example, ETFs or different sectors and see how are they reacting. What effect do all these things have, both in terms of economic announcements and like speeches or political announcements like we have had over the past week, because it's good to have at least a intuitive understanding of how the world moves and what forces shape our economy, because at the end of the day the economy determines how much wealth we're going to have to to buy the things that we need. So if you start doing that, it will help you in the long term. Okay. All right, guys. So have a fantastic weekend, and I'll see you all next week. Again, I recommend that if you are wanting to understand more about crypto, that you go and follow Jonathan's session, the Cardano-based session, and it's a fantastic insight about what happens inside an ecosystem. Where obviously Jonathan is concentrating on Cardano, but the same thing will go on in other types of ecosystem, whether it's Ethereum, Solana, or anywhere else. So it's important to understand that cryptocurrency are not just economic investment, but there is a use case for different coins, different projects that goes beyond how much is it worth. It is worth a certain amount because it provides a certain type of utility. Okay, so Jonathan, obviously you would have posted, I expect, the link in the chat box. If you haven't, please do it now.
Yeah, on my phone today.
That's all right, and I'll catch up with you briefly later.
Yeah, I'll see you later. Thanks, everyone. Thanks, Luca.
Bye, everyone. I'll give you a few more seconds if you want to copy the link for Jonathan. So 5, 4, 3, 2, 1.
Bye. Thank you.
Bye.